All right, guys, welcome to another edition of Wednesday Live. We're going to be doing it together today. Coincidentally, we are going to be expecting a Fed rate decision today by 8 o'clock, my time here in Nigeria. I don't know the time it is in your country, but of course, we're expecting rate decision today. And guess what? I don't think rates will remain the same. They will likely, cut rate. They will likely hike rate rather. And if they hike rate, you know the implication. All right, it gives strength to dollar when rate is hike. Okay, and all the majors will fall. So if it happens like that, all you need to be doing is simple. Begins to look at how the majors are setting up for sell, and begin to look at how the the dollar pairs, like USD CAD, like USD JPY, like how they are setting up for a buy. Begins to look at them. Okay, and that's exactly what we're going to be looking at today. How to look at how charts are setting up preparatory to a major decision. All right, so that you can position yourself appropriately. Is that okay now? That's what we're going to be doing. So first and foremost, let's look at DXY. DXY. Okay, so in looking at DXY, of course, I've showed it several times that in weekly time frame is bullish, but in smaller time frame is due for some corrections. Okay, due for some corrections, because clearly if you look at this move right here, you can see correction, you have a push, you have correction, you have a push. So this is how you apply a divergence. You notice that when you have this push here, this push you have here is bigger, in size than the push you have here and this one you have here. So that is a clear demonstration that the move to the upside is no longer there. And this can be confirmed with the aid of divergence. How do you use divergence to confirm it? Where are the two last pushes to the upside? This is the first push. This is the last push. Okay, we want to look at the end of these two pushes. All right, and look at the corresponding level on the indicator. Look at the first level here. Look at the second level here. You can see here it's making a higher high. Here it's making a lower high. This is a clear divergence. All right, the way the lawyers, they use the constitutions as a tool, to prosecute their cases in court. The same way we have our own tool in financial market analysis, and one of the tools is divergence, the application of divergence. Well, another one is the use of Fibonacci. These are tools that we use to gauge whatever we are doing in the market. Of course, you know that all these data you are seeing are generated by computer. It's not generated by human being. All right. So we need to be able to have a tool that is able to read whatever is happening there, so that we can take informed, decision. Do you understand now? So from here, we know that there's going to be a correction, but of course, you remember that the rate decision that is coming, okay, the rate decision that is coming is going to favor a bullish dollar. We know that for sure. So there is nothing wrong in projecting this pair, this DXY, to just be moving a little like this before the decision and then flash up. So what does it mean? It means that this trend is still continuing, but as soon as it breaks this top, guys, be watchful. It has to come down, because that news will only help it to break this top and it will come down. Okay, and if the news make this to go down, that favors the bias that you have before, that the pair is going to correct. Do you understand? But for now, what we are anticipating is simple. What we're anticipating is simple. Let this come down a little, then it move up when Fed hike rates again. Okay, that is DXY. Of course, whatever we see in DXY will tell us what is going to happen to other pairs. Okay, euro dollar. Okay, euro dollar. This pair is in a clear downtrend. Correction pulls down, correction pulls down. It doesn't break this, so all these are still the same. You see, so what we're expecting is normally we should expect this structure this way. All right, I want to expect this structure this way. I've been emphasizing it that this will be the best we can get from euro dollar. We'll have loved it to come to this level, okay, around 1.0500, so that from there we look for a move to the downside. Why do I have to suggest that? What I do is this. If you are looking at this trend, you see this pulls down, it doesn't break this low, so it corrected and pulls down. So I take the whole of these three waves as one. Okay, I take it as one, so that if I want to take a fib, I'm not going to fib this wave like this. I will fib from here to this level, and I want to get this level. That's why I arrive at this level for a move to the downside. Okay, all right. So that's okay. We're having a lot at for GBP AUD. Sorry, let's quickly check GBP AUD. Let's see what's happening there. GBP AUD. We're having a lot there. Okay, we're having a lot. Let's check. Okay, this alert we are having, we are not going to consider it. Excuse me, please. Okay, so I would like us to check this pair. Okay, I've set alert at this level. Sorry, we are going to go back to euro dollar, but let's treat this alert first. Okay, it's happening at 38. No, let's leave it. Let's leave it and see its possibility of pushing down a little. Let's see if it will see push down a little. All right, let's see. But ultimately, it's going to make a move to the upside at this level. Let's see how it will go. Okay, let's see how it will go. Let's just leave it. So let's go back to euro dollar, guys. Euro dollar. So now, what I'm trying to do here is this. You see, you are seeing this consolidation. All right. So ordinarily, if there's not going to be a decision, a Fed decision in the evening time, we would ordinarily expect this to go up this way. Okay, but because we're expecting a rate hike because of the current inflationary pressure in the United States, that rate hike, okay, will definitely break down euro dollar. So I don't think that euro dollar can get to this level before that news release. Okay, so if we are thinking that it cannot get to this level before the news release, then it then means somebody is not muted. Why? It then means that we should expect a retracement of this move and then expect continuation. But we have to be careful about it. And why do I have these opinions, guys? It's not just out of the blues. Why do I have this opinion? I've tried to look at this, study this consolidation, and I see that there is no divergence. Okay, you see this move, you see this lower low here created, and then here on the indicator, you see lower low created. So this is just like a kind of replica of a fake flag test that you see at resistance. So if that is the case, I'm of the opinion that euro dollar will likely do two things, guys. To likely have this impulse retrace to 50 to 61.8 and then have it move down. Or alternatively, when the rate hike decision comes, there might be a break to the upside of this move. Market will flash up to complete this structure. Go and write it down, guys. Either of the two will happen. Market will flash it up to complete this structure here and then bring it down immediately. This is where many people waste their money in the course of trading news. They waste a lot of their money. Market will flash up to complete this structure. Okay, complete this structure. And as a corrective structure, and exactly at this level, as it brings the price up, market will also flash down for continuation. So that's why you must be careful trading news. Trade can help us to complete structure. Okay, so but presently in my signal channel, we are in the buy of euro dollar. We're in the buy. Okay, want to buy it just to this level. Want to see what will happen, but you cannot enter now, it's late. Okay, pound dollar. You can see that, you can see how pound dollar is setting up for a breakdown. Okay, in anticipation for a Fed rate decision. You can see that it's trying to give us here an ending structure. What is an ending structure, guys? An ending structure is the one that look like this. The one that look like this, you have an impulse, and you have, after an impulse, you have a deceleration. This is an ending structure. Okay, when you see a structure like this, it's certainly going to make a move to the upside. All right, it's certainly going to make a move to the upside. Hold on, guys. All right, so and if it happens like that, one test you are going to do is to carry out a divergence test. You want to find out if this make a divergence. Okay, you want to see whether you have something like this. Can you see, as this one is making a higher low, this one is making a lower low. Okay, so that is a divergence. So once it happens like that, good, you know that this move to the upside is non-negotiable. This one is non-negotiable. The same thing, this is for a buy setup. But for a setup, if you are also seeing a market make a push up and then it's making a little push, just making this kind of structure here. Okay, that's an impulse and crawl. I call it impulse and crawl. It makes an impulsive move and is now crawling. Okay, so when you have it that way, all you do is to find out if there is divergence. You see that there is divergence. Why do I say there is divergence? You see that this high here is higher than this high. Okay, and if you look at the indicator, it's not so. You are having a lower high. That means that there is a loss of volume to the upside. There is a loss of volume to the upside. And whenever there is loss of volume to the upside, is a signal that you are going to get a move to the downside. Is that okay? And you can see that that move to the downside is in favor of the news we are expecting from the US. It's in favor of that news we are expecting from the US. So all we have to do right now is that the news will come, and if the structure is not complete before the news will help the structure to complete, and after it has helped it to complete, it will come down before you see correction and then a move down. Do you get now? So that's how it is. Ali Ames, you raise hand. What do you want? Do you have any question?
Yes, please. The audio is very poor. I'm not even following at all.
I want to ask, is it general? Is it everybody that is having a poor audio?
I'm hearing perfectly fine.
Is there anybody having a poor
Yeah,
audio?
same with me. Same with me. It's clear. Hearing you. Most
Everybody,
probably
is it clear?
it's his bandwidth.
If you have a clear
Loud and clear,
audio,
loud
can you
and clear.
type 1? Hello. If you have a clear audio, type 1 on the chat box, please. If you have a clear audio, I want to see 1
Your
on the
sound is
chat box. 1. Just give me 1 on the chat box if you have a clear audio. All right. If you have a clear audio, type
Your
1 on
sound
the
is
chat
loud and
box.
clear. It is network.
All right. Mr. Ali Aim is your side that's having issue.
Yes,
Okay. The audio is good because
okay.
majority of the people give us 1 on the chat box. Okay. So check your network or check your audio. Let's go. All right. So this is what we're going to be expecting. Okay. On a normal day, I normally give this kind of trade, you know. I normally give this kind of trade here, but in recent time I don't give such trade. Okay, because after this corrective structure, you have a push-up. This is a corrective structure for another push-up. Okay, but we don't want to be caught unnecessarily. We want a situation where when we have a trade, we know what we are doing in it. We don't want a trade. We don't want to trade an ending structure. You know, ending structure can decide to end anywhere. It can end here, it can end here, it can end here. So in as much as you don't know where it's going to end, just leave it. Let it do whatever it wants to do. And when this down move is coming, we're going to take it to the downside. Is that okay now? Okay, that is pound dollar. We also have a setup with on gold. You see, on the higher time frame, gold has sold so much. Okay, gold has sold so much, and of course, let it load. Of course, if you see what it has done here, see that it's right here. Nobody want to sell gold at this level. Nobody, you know, from this level, I told you clearly that gold is coming here. Okay, but why we miss this trade to the downside, this massive trade, why we miss it is simple. Guys, why we miss it is simple. We're looking forward to having this structure push up a little to the upside. This 1, 2, and 3, want it to push to the upside, at least to this level, before we have this move to the downside. But it gave a short C. This is a very short C. Okay, you see this longer A, this is a short C. And from there, we did not also anticipate that when this move to the downside happened, we just need to take the corrective structure, you know, and take a move to the downside. We did not anticipate it until it left us. It left us and moved to the downside. But that notwithstanding, we will still catch some move in gold. Okay, right now we have, on a smaller time frame, we have a move that is very clean and clear, guys. Okay, I told you that when you see a structure like this, you have to anticipate an ending structure. When you see an impulse and a market is moving this way, okay, every last low is a potential buy opportunity. All right, that was why exactly at this level, 1684, I had a trade. Okay, I had a trade here, and I did made you know, about 7K on that trade. Okay, why did I enter at 1684? The reason why I enter at 1684 is that on a higher time frame, we are at demand. Okay, as you can see clearly on a daily time frame, nobody in his right senses will sell gold here. We are at demand. Okay, and then when I come to 1 hour time frame, if truly we are at demand on a lower time frame, it then means that we are supposed to see an ending structure in a lower time frame. This is the secret that most people don't know that I'm exposing to you now. A confirmation of existence of demand in a higher time frame is seen clearly from the formation of an ending structure on a smaller time frame. And that's what you have just seen here. In higher time frame, we did not see this kind of structure there. Okay? In bigger time frame, we did not see it. You can't see it. But we saw the structure of the market that purely we are at area where we should demand, where investors should demand for gold, because the price is a bit cheaper than it used to be. But right now, a confirmation, we have seen a confirmation to the existence of demand on a higher time frame by the formation of an ending structure in the lower time frame. And that's what we have seen here. And again, you know, I told you, as a financial analyst, you must have a tool, or as a technical analyst, you must have a tool for you to gain confidence. And what is the tool? We have to do the divergence test to see if this is a truly an ending structure. And we should see a divergence if it's an ending structure. And that's what we are saying here. Look at where the structure started. Look at where the structure ended. If you plug it this way, you can see that this market is not making a lower low. It's making a higher low. Even if you don't plug it with this one, you are plugging it with this one. You can see it's making a higher low. And he's making a lower low here. That is divergence. After you have seen it, in all ending structure, you are going to see one particular move that is very clean and break all the structure. And where is the move? This is the move that flash up and break all the structure. Okay? That is the move. The move has appeared. So if you have seen that move, guys, what's the next thing for you to do? You have to find the what? You have to find you have to get the fib of that leg to the downside. Where's the fib? Here. Boom. Get exactly 50 to 61.8. We won't go to come back to this level before we take a buy. You know, that is why I have a friend. I will call him a mentor. 6-7 years ago, he used to be my mentor. All right. I still belong to his group. I saw him asking people to place a buy at this level, and I was laughing. I said, hey, this is my master, and I can't correct my master. You know, how will I tell this man that no, you don't do this. This is not the right thing to do, because my master is not an Elliott wave analyst. Okay, so he's going to analyze the market in a conventional way. He said this has enough pullback to go. But of course, if a board bounces from a 3-story building, you don't expect it to just bounce a little. It has to bounce very well. So this has moved up. We expect it to come down more to give us a better discount. And we can see from the structure, from the corrective structure that is gathering, that this is going to make a WXY structure. Okay, where is the WXY structure? 1, 2, and 3. That is W. 1, 2, and 3. That is X. 1, 2, and 3. That is Y. It is this Y that is going to push gold to the right level to buy. I'm expecting it to push to 1700. 1700, guys. I'm expecting gold to push to this area, to this level. Okay, that will be a very fantastic, you know, pullback for us to buy. And in that case, even if you put your stop loss here, that is 220. If here, 150. If you maintain 150 pips stop loss, and then expecting a reward that is as big as 700, that is cool. Okay, that is cool. So right now, I'm going to set alert at 1700 for gold. 1700. You can set alert at your end, guys. 1700 for gold. Boom. All right. At this level, we want to have a move to the upside. Okay. Let's move on. USD card. Okay. USD card. Daily. Of course, I was expecting USD card to make a move to this level. All right, take a fib of this level, want it to come to this area. Okay, you can see fine move. All right, want it to come to that level. I'm looking at formation of this structure, of this corrective structure. You see this? 1, 2, 3, 1, 2, 3. This is what I'm expecting, guys. Then, of course, you know that we have a bearish bias, but we are expecting this move to the upside to replicate itself here. To replicate itself right here, guys. Right here. Before we can have a move to the downside. Because, of course, you see this structure in the middle, this corrective structure in the middle. Okay, this one is A, this one is C. Okay, A, three-wave structure, B, and C. Then you see this one, move down, move down. So this is big A. Then this is A, B, and C. You have big B here. And then you have C here. This has become A, B, C corrective structure. What happened to this one? This big one here, you hit C here, you can term it as big A. Okay, so this is A, B, and C, big B. Okay, and then this one that is to move to the upside is big C. So this is what I'm expecting. And then this move to the downside will continue. Okay, probably that is the time that DXY will correct very well. Move to the downside will continue. At below here, we have a move to the upside. This is my expectation for USD card. But for now, what do we want? What do we want, guys? For now, what do we want? We have to look at what we want. Okay, what we want is simple. We want to see a situation where USD card is pushed a little bit down to this level. This is where we'll be comfortable to look for buy opportunity. All right, we'll be comfortable to look for buy opportunity at that level. But at the level where it is now, there is no trade setup, guys. No trade setup. Okay, so we want this to happen. You see corrective structure here, pulls down. Corrective structure pulls down, pulls down, pulls down. So this might look like an ending structure. If it gradually, pulls down, little up, pulls down, little up, pulls down, little up, pulls down, and get to this level, guys, all we're going to be expecting is to see a move. We would like to see a move, a fine move to the upside like this. All right, then we now find the corrective structure of that move and take a buy to the upside. Can I show you example of a fine move that I'm expecting? Let's go to Euro AUD. Let me just show you example of that move. Okay, can you see? This is the example. This is an example of the move you'll be expecting from that level. It's not a little money. It's not a little trade volume that pulls this pair to the upside. We want this move, find the retracement to exactly 50 to 61.8 and take your buy to the upside. Is that okay now? That is what we're expecting for Euro card. You can see right from time, we have decided not to touch it because it has not gotten to the right area where we like to take a buy. Okay, where we like to take a buy. Then if news comes and it decides to push this pair upward, it's better for us. What do I say? If news come, of course, USD card is probably going to be strengthened. It's going to push up if Fed increase interest rate. It's going to push up. So if this pair cannot get to this area, Okay. If this pair cannot get to this area before rate decision, and it decides to start pushing off from here, that is cool. Only that it's not giving us a buy opportunity because it failed to get to our level. But then it's giving you an ending structure. Look at it. It's already giving you an ending structure. Okay? Giving you an ending structure, which I doubt it will go down from here to our level. But of course, it's giving you an ending structure already. Can you see? Can you see? It's going to be going this way, this way. Once you break this level to the upside, just begin to look for a sell opportunity to the downside. Okay? That is how USD card is expected to behave. All right. So next one is USD JPY. Okay, I saw a clear sell opportunity on USD JPY today, but I was very careful, you know, taking the sell opportunity. I was very, very careful. Okay, I was very, very careful taking that sell opportunity. And the reason why I was careful is that if we are expecting Fed to increase rates, there's possibility of, you know, USD JPY to go up. The possibility is there for it to go up. Okay, so if we are already selling from here and it goes up, then we will lose. Okay, so what I want to do is to watch what is going to happen. Okay, let it load, let the chart load. So the network is a bit slow. I want to watch what is going to happen after rate decision. I don't want to touch USD JPY now. Okay, I don't want to touch it now. My network is a bit slow. Sorry, it's taking time to load. It's taking time to load. Okay, all right. So because here you can see what I told you about ending structure. You can see that, you can see this push you have here. Do you notice that you no longer have it again? No longer have it again. So that is a sign of weakness. Okay, and you can test that sign of weakness by checking the divergence. And you can see from here that right here you're having a higher high, and right here you're having a lower high. This is already a clear case of a divergence in a higher time frame. So all we need to do is simple. We need to just get it right, okay, in the lower time frame. We need to just get it right. Where's my RSI? RSI is hidden. What's the problem? Oh God. Oh, just give me a second, please. Oh, okay. Correct. So it's back. So now what we just need to do is simple, because we don't know what will happen. And already we are having this structure here. Okay, let me do some cleanup. You're already seeing this structure here, guys. Okay, and we are expecting rate decision. So, and ordinarily, this is giving you a sell setup. But of course, if you look at this move to the downside, this is just a little above 38. So not right to sell at this level. If it had pushed up to around this level, then we may expect to have a sell setup. But it's not there yet. So what I want to do is to monitor UJ. I want to monitor UJ and see how it will behave when new rate is announced. So I want to see whether it will gradually come up to this this level here, to come up to this level here. Okay, Then from here, I can look for sell opportunity, guys. Can look for sell opportunity at the top, maybe 145.00. From there, we can look for first breakdown, corrective structure, and a breakdown. So that's how I want us to look at it. I just want us to be very careful. You don't have to rush it because you know a major rate decision is coming. All right, a major rate decision is coming. Is that okay now? So now let's move. That's it about the USD JPY. The next is I think I have a setup on. No, I don't have a setup on Euro JPY. I don't have a setup. Then this one, yes, same thing is applicable to New Zealand US dollar. Okay, before rate decision, you want to see this continue to happen. This is an ending structure, okay, which eventually is going to crash down. Okay, corrective structure down again. Is that okay now? That's what we are expecting. Okay, that's what we're expecting. The same thing is applicable to this one. You can see we're having an ending structure. We had wanted it to correct like this, okay, so that we take a buy to the upside, but it didn't correct like that. All it did instead is to have this ending structure, okay. This ending structure is not going to continue forever. At a point, it's going to break down like this. You now find corrective structure and getting for a buy, okay. So GJ, I'm expecting this trade to happen with GJ. I'm expecting this setup, you know, to happen. If you look at it, but I have two opinions about it. Two opinions. That's why I want to be careful. I want to be careful about it. Of course, you know that we are at supply. We are looking for sell opportunity. We are not in any way looking for buy opportunity. So it's possible that this move down is having correction in 3 waves, 1, 2, and 3. And if it's correcting in this 3-wave structure, then it then means that the last wave is not complete yet. It then means that this wave is not complete. It might come up. Okay. So if you have a wave down, 1, 2, and 3, then you now have this wave down. So when you have this wave down, okay, you have this move to the upside. You have this move to the upside, then you have this move to the upside. Before you have this down move, you have this down move. So we are going to stay, go write it down. We are going to stay for a longer time in a sideways for pound yen. All right, for GBP JPY. We are going to stay sideways for quite some times now. And I'm trying to figure out why it's so. I cannot get the reason why it is so, but we're going to stay sideways for quite some time. Okay, so let's just be patient. Let's see how, you know, this will form. You could also see a situation where this breakdown here is corrected to the appropriate fib level that correspond with supply. Okay, that correspond with supply. From there, you can see a move, a push to the downside. Let's look at it in 1 hour time frame so that you get what I'm saying. You see, if this correction is enough, after this push down, if this is the correction, then you need another push down. Okay, so in seeing another push down, you can as well think that this move to the downside is the first move after this break of trend here. Okay, is the first move to the downside. Can you see that is being corrected here? And of course, you also see that this is an ending structure. forming a higher low, higher low. If you test it with a divergence, you see that on the divergence, on the indicator, you are seeing a lower high right here. Okay, so if that's the case, it then means that I would just like to find a fib of this wave to the downside, this impulse to the downside. And since this is a zigzag corrective structure, I want to look at 78% fib retracement. And you see 78% fib retracement correspond with an impulse, a supply area here. So if that's the case, that's why you see that I was anticipating that when this market gets here, push here, we're going to have a push down to break this structure. Okay, from there, correction will get in for the downside. So this kind of trade, I don't like to get in at the exact fib level. In case it wants to continue to push up, I will not be caught off guard. I would like to see it commit to my hand first. Okay, I want to see it commit to my hand first by breaking down. Break down this way, break this internal structure. So as soon as it breaks down this way, yes, it has committed itself to my hand. I can now look for corrective structure and get in for a move to the downside. Is that okay now? So that is the trick I want to use to catch GBP, JPY. All right, US 100. Okay, US 100 is an instrument I want to trade. Of course, you remember I told you that we're expecting from this level, we're expecting it to break down, let it correct, we sell. But of course, if the nature of a breakdown is corrective, expect if it has to go down, if the pair has to go down, expect a three-wave structure with a strong A and C. Let me repeat myself. Watch, this is another theory that emanates from me. All right, I make use of it. We are having a push up, a trend like this. Okay, and this is the end of the structure here. Okay, if this is the end of the structure, and from here you are expecting this market to push down. If in an attempt to push down, it's pushing down like this. It's pushing down like this. Correction, push down, correction, push down, correction, push down. Can you see? You can say that this is a push down because if this is an external structure, you have had an external structure broken. But was it broken by an impulse? No, it was broken by it could be an impulse anyway. But what I mean is that it was broken correctively. That's the appropriate language to use. And so anytime you see that such structure is broken in a corrective manner, then you are going to expect a move up that is very sharp. A move up that is very sharp. Then correct like this and very sharp. This sharp move you see here is to compensate for this slow move in breaking the market structure. Then you have to just find the fib of that impulse, and then because this is a zigzag corrective structure, just wait for it at 78% fib retracement, and from there you can have a move to the downside. Okay, have a move to the downside. Do you understand? That is how it is. And the same principle I've taught you here, you need to come and apply it for this structure. Okay, you see, this is the impulse, this is the leg here. It has not taken it. Can you see? This is the last low before this higher high. Okay, this last low here was not taken by this. That's why I have one of our members who asked me if he could sell at this level. I said no. Even though it's sold from there, does not mean that it was right to sell here. The reason is that potentially we're still in the uptrend. at this level. Why? Because this low has not been taken. It make a move up. The market made a correction to that level, and it's still going. So we are seeing uptrend. Now it is now that we are in a downtrend. Why? The last low here have been taken to the downside. So all we want is to have a corrective structure, guys. We want to have a corrective structure of the 3-wave move to the downside. And the corrective structure, you're already having a strong move. Okay, we need a correction and then another strong move. This has become a 3-wave corrective structure to the upside, up to 650 to 61.8. And then from that level, you can have a sell opportunity to the downside. Do you see it, guys? So that's how, I look at the market. That's how I look at it, and that's how I want to trade. Don't know if there's any other setup that I have that we can take a look at. Let's see. We have this setup on Euro AUD. Look at it, daily time frame. Okay, daily time frame. You see that in daily time frame, this is a 3 waves up. After this down move, right? After this down move, of course, this is your orthodox low, orthodox bottom. Take the fib of this impulse. Okay. Target 50 to 61.8 here. Okay, that's the first thing. I don't know if you guys understand that your corrective structure started from here. Okay, 1 wave up, 1, 2, 3, then you need 1, 2, and 3. So in most cases, you see that the Y leg become excessively too big. And that does not mean that all these ones are not part of the corrective structure. So in analyzing the last leg to the upside, you are seeing clearly that we're going to have 3-wave structure. Okay. And this leg, 1, 2, and 3. Somebody will ask, why am I not considering these little waves that is here? Because I am looking at the size of my A and my C. Okay, this is my A, this is my B, and this is my C. I'm looking at it that they are of equal size. That's why I cut it that way. Okay, all right. And then I also have a 3-wave back. 1, 2, and 3, 1, 2, and 3. Then 1, 2, and 3. Okay, this is W, X, and Y. So if we have a 3 waves up and we have a 3 waves in the middle, what are we expecting here? We may either get a 5-wave structure here or a 3-wave structure. We might either get 1, 2, 3, 4, 5 here. And that will be what? A, B, and C. Alternatively, we can also get 1, 2, and 3 here. And if we get 1, 2, and 3 there, then that will be 3 waves up W, 3 waves down X, and 3 waves up Y. Then from there, we have a move to the downside. Is that okay now, guys? So that's why we are looking for buy opportunity at this level. Okay, we're looking for buy opportunity at this level. So, but nevertheless, let's check 1 hour time frame and see what we are trying to do. So if we are looking at buy opportunity at that level, and then we're having this strong move here, what does it suggest to you that, guys? Suggest to you that there are a lot of volume that have been pumped into this market at this point in time. There's a lot of volume. So all you just need to do to get involved is to look for corrective structure down to what? 61.8. Can you see at this level here? Okay. In fact, what I had to do to even get a precise entry was to go to 15 minutes time frame. I have to go to 15 minutes time frame. So when I go to 15 minutes time frame, what I saw was very clear. I took this impulse. You know, I told you, you must be looking for fine impulse in the market. It's going to help you. Okay. And I see this zigzag back to 78. What did I teach you guys? I say every zigzag corrective structure must come to 78. If a zigzag corrective structure is ending at 50% or 61.8% retracement, it means that the A leg of the zigzag is very short. It's not more than 38%. What am I saying, guys? You know, I love to teach you the theory and the practical together. If you have an impulse here, if it has to be corrected by a zigzag corrective structure, if the A wave end here and you have B and you have C here, you can take this as adequate corrective structure for the upside. Okay, you can take this to the upside. Why is it that you can take this to the upside? Because you see that even though this one does not get to 78, why is it that you can take it? Because you have this A wave equal to this C wave already. So, and the reason why it doesn't get to this level is because the wave A does not pass 38. So by the time it corrects and make an equal leg, it's not going to pass 60. And then that will still be correct. That is a condition where you can take a zigzag at 50 to 61.8% fib retracement. But if this A already gets to 50, by the time it corrects and pulls down, it's coming to 78. Just like exactly what you see with this structure. Okay, you see A already pushed to 50, just a little push to get to 0.618, and it corrected and pulls down. Okay, pulls down to 78. And then at this level, we know we're going to have a buy to the upside. And we took that buy at 1.4600. All right, just that the market is not pushing as expected. It's very slow and sluggish. We had a break even. We may likely be hit, but that is not a problem. Okay, as far as I'm concerned, achieving a break even in the trading, I even take it as a win. Okay, because if I did not break even to secure my capital and it got there and start going negative, what happened? Then my account will drop. But right now, my account cannot drop because I have a break even. Is that okay now? So that is it on GBP Euro AUD. Let's look at GBP AUD last but not the least, guy. GBP AUD, yes. Right. GBP AUD. If we miss the first trade on this GBP AUD, I don't want us to miss this second trade. It's very important. Okay, 1 hour time frame. Of course, let's go to 8 hours time frame. You know, I've been telling you that this pair is likely going to get to 84. Okay, I want it to clear this level before any fall to the downside. And then we have 3-wave structure to the upside. We have 3-wave structure to the downside. We're expecting either a 5-wave structure to the upside or 3-wave structure to the upside. This is where it's going to make structural strength, structural sense to have a move of GBP AUD to the downside. Is that okay now? That's where it's going to make structural sense. Okay. So, but right here, it has taken this low. So at any moment from now, it should make a move to the upside. And then when we look at the structure here, what we saw was very clear. You know, if you say a market has gotten to a demand area in a higher time frame, there is something in a lower time frame that will show that the market has indeed gotten to demand area. And I keep telling you, and that thing is an ending structure. Okay, that thing is an ending structure. You see, it's an ending structure. Okay, so in an ending structure, all you need to do is to carry out a divergence test. Okay, you want to see if there is divergence, and you can see right from here we have a divergence. Right from here, the divergence started here. Can you see the move to the upside, upside, upside? That is divergence. Okay, so based on that, we knew that once you have ending structure that is being confirmed by divergence, you want to look at an impulse that is formed thereafter, and look at the impulse. Look at the impulse, guys. Find impulse, and then it's corrected down to this level. That is our, that was where we're supposed to take this trade yesterday before we remove our pending order. We set our pending order at 1.7275, exactly this level, guys. This was our pending order. We're just supposed to have like 10 pips drawdown in in our signal channel. This is where we put the pending order for GBP AUD. 1.7275 exactly. Right, and it was, we did it when the market was still here. See, the market is going to come here to tap us here. Okay, and exactly at that level, just a few pips drawdown, like 5 or 7 pips drawdown. And look at it, we have a move to the upside, corrected, a move. So right now, what do we expect? What we expect is simple. Want to see trend development at this point in time. What do I call it, guys? Trend development. Okay, and we are going to confirm this trend development with some tools that we use. Okay, this has achieved a push up, and then if you look at this one, you have correction back to 61.8, and you have this move. Okay, I'm already tactically teaching you how to trade a trend line. Okay, when you see a trend development, this is how to approach it. Excuse me, this is how to take it. I think we had a break even on the euro dollar. Okay, we had a break even on euro dollar. All right, no problem, no problem. Whoever can re-enter can re-enter, but no problem. Okay, let's go. We're on GBP AUD, right? Yes, GBP AUD. So right now, what you are going to look at is you are going to look at this move to the upside here. Okay, this very move to the upside. You are going to take the fib of that move again. Okay, and you decide you determine 50 to 61.8, this level. Okay, that's where you want it to come. You want it to come to this level. Okay, that is the correction for that move. And the reason why I will teach you now how to carry out a test. Okay, a divergence test that will show you that after you have gotten this market corrected to this level, after you have gotten this market corrected to this level, what is it that will show you guys that you are going to have this move to the upside? It's very simple, because somebody can as well come to tell us that this is a three-wave structure to the upside and is expecting a down move. All right, I'm going to teach you a test now that will show you that will differentiate a three-wave structure that is an impulse from a three-wave structure that is a correction. Okay, do you notice that you have two separate pushes here? This is a push, this is a push. Okay, when you go to your RSI, just get the tip of those two pushes, this one and this one. So if you are having a higher high in your push here, and on your indicator you are also having a higher high, it shows that the strength to the upside is preserved. That's the interpretation. The strength to the upside is preserved, and that is why there is no divergence. But if you are seeing a higher high here and you are seeing a lower high on the indicator, it means that the volume is to the downside. You don't even look at this one as an impulse, three-wave structure as an impulse. Remember, I told you that you have a single impulse, you have three-wave impulse, you have a five-wave impulse. This is an example of a three-wave structure that is existing at the level of demand. Okay? And all you need to do right now is that since we know that there is no divergence, then we know that the move to the upside is non-negotiable. So what we are going to be checking is correction back to the appropriate fib level. Correction back to the appropriate fib level. Where's the appropriate fib level, guys? This level. As soon as it gets here, matches this trend line, okay, all you just need to do is a move. Take a buy for a move to the upside. Is that okay now? Take a buy for a move to the upside. And you also check this, okay? Let me also teach you this, guys. You know, the essence of Wednesday live session is to show you a lot of trading secrets that will help you. If you plug a trend here, okay, do you notice that right here, you have a higher low than this one. This is a low, this is a higher low. Okay, right here, if you check the stochastic, what do you notice? Boom. What do you notice? A lower low. What do you notice here? A higher low. You are noticing a higher low on the indicate on the price, and you are noticing a lower low on the stochastic RSI. This is what is called bullish hidden divergence. Bullish hidden divergence. And that is what proved that this move to the upside is going to come. It's going to come. But I got confused about this move because I was looking at this corrective structure to still come down, and I didn't want to lose. That was why I did not catch the whole of this move to the upside. Otherwise, we had a buy limit at 7275. Are you okay now? So that's how to make use of some of these tools. So right now, let's leave let's leave it to correct back to this trend line and see what happened from there to the upside. And of course, you can see your RSI is still bullish, it's still above 50. Okay, and this one is resetting to the low. So just allow this to come down to this level and look for buy opportunity to the upside. Let me see your questions. Somebody say good, please. We have analyzed good. Okay, we have analyzed good. Can watch the recording. BTC. BTC. Somebody's at the waiting room. I think I've answered everybody right now. Okay, let's check BTC. Somebody say we should check BTC. Yeah, for a couple of weeks now, I've had it so good with BTC. All right, I traded it on Saturday with success. Okay, of course, you know, when this market was still here, when this market was here, I drew this equal high for you, this level, and I said that this market is still in a downtrend. But for us to continue downtrend, what did I say? I said this equal high must be taken before you see this low. I think we can check. If we can see it clearly with analysts. Let's check. You know, if you have some of these, if you have understanding of chart this way, it will help you, you know, it will help, you know, measure. All right, it's going to help you. Believe we can see it. Can see it where I said, aha. Is it here? Is it here? You have to be patient because there's need to learn and learn well. Okay, I think in the general group, you have to be patient, learn and learn well. Well, you have to understand concept of liquidity. If you don't apply concept of liquidity in your trading, it's not going to help. If you don't understand liquidity, you are going to do guesswork most of the time. You're going to do guesswork most of the time. So I've just applied concept of liquidity to BTC, and perfectly it respected the analysis and is doing exactly what we expected it to do. So you just have to be patient. This is a Wednesday live session that's meant for everybody to learn. So it's not a session that you come rushing. No, you don't rush it because we want to learn. I've got to show you where we apply liquidity in the chart, on the chart. Okay. So if you are trading Elliott wave theory, you don't trade it in isolation. You don't trade it in isolation. Can you see? I think this is BTC. Yeah. See, this is the chart. I believe everybody can confirm that we can see the chart. This is the chart. And on this chart, it's very simple, it's very clear. This top here is an equal high. Okay? And on this equal high, if you look at it based on Elliott wave theory, this is wave A, this is wave B, and this is wave C. But with Elliott wave theory, we know that this wave C should come up. But Elliott does not anticipate this liquidity here. No, did not discuss concept of liquidity, truth be told. But he said A, B, and C. And then from here, we move to the downside. But even though this market was exactly at this level, I said here you have pool of liquidity on top here because we have equal high here. So there is need for this market to break it to the upside. And then after breaking it to the upside, catch liquidity at the right supply area here, and then begin to move to the downside. It's simple. That was what I said. Is that okay now? So now let's go back to our chart and see how it behaved perfectly well. Okay, how it behaved perfectly well. Okay, yes, right now we are on the chart. You see what I was saying? You see the pool of liquidity I told you that this market is going to make this structure, is going to come over here, break this top, and then come down. And you see, exactly as I told you, that is what it's doing. And I equally told you that, you know, I equally told you that when it makes this structure here, I told you to make a correction, pulls down, correction, pulls down. And exactly what it has just done. Why do we think so? Look at this first push to the downside. It has broken the structure here. Then we know it's going to correct to 50 to 61.8. Exactly at that level, it pulls down. Okay, look at the second move to the downside. To take the second move to the downside, look at the fib level, 50 to 61.8. What does it do? It pulls down. Can you see now? So if you now look at this, what I like to do way forward is this. This is looking like an ending structure. I want to get a confirmation whether to begin to look for my buy opportunity to break this top, or to look for corrective structure here and still look for downside. Already you see that this is an ending structure. It looks like an ending structure after this wave, because you already have a complete corrective structure here, A, B, and C. So let's find out if this one will continue to go to the downside. This, our job, is not a guesswork. It's a work that we have a tool to confirm whatever we are looking for. Okay, so what I will just do here is to plug a trend to connect this. I want to plug this trend and go back to my indicator. I want to see on my indicator, do I see lower low the way I'm seeing it here? Okay, low, this low is lower than this one, this low is lower than this one. So I want to plug it here. Can you see, guys? So you can see here that you're having a low. This low is lower than this one. This low is lower than this one. This low is lower than this one. So there is no divergence. There is rather a convergence. It means that there is agreement between price and the indicator. They are going in the same direction. So for that reason, guys, what I'm going to do is simple. Look at it. Let me tell you the trick, guys. You see this move down, a correction. You see this move down, to me, it does not break this low. So for that reason, I'm going to take this wave as one wave. I'm going to take this wave as one wave. And so if that's the case, and I will tell you the implication, why you need to take this wave as one wave. If you are taking only this small wave, when you are finding the fib, here will give you 50 to 61.8, and it will deceive you. You are going to take a sell from here, and the market will go up. And it will be like, it's like Fibonacci is not working again. It is because you are not getting the gist. So right now, this is first wave, second wave, third wave. So if you take a fib of this last push down, you are going to get 50 to 61.8 right here. So what are we to expect now? What we are to expect is simple. We want a situation where we are able to define appropriately the corrective structure that will take this pair right here. Okay, right here, 1, 2, and 3. If you can get it right to this level, you will see that at that level, it will have matched up to a trend. Can you see this trend for people that trade trend line? And if it comes to this field level, that's your structural level, the final test you are going to carry out is what is called a bearish hidden divergence. A bearish hidden divergence. Of course, you see that this one, as this one is going up, this indicator will be going up from here. Okay, and if you look at the previous low, which is here, and the last low, which is here, if you plug the trend, you see it's from this level to this level. And if you go to indicator, you see the corresponding level is here. It's going to be this level to this level. Can you see that on the price, you are seeing a lower high, okay? And on the indicator, you are seeing a higher low, a higher high, rather, a higher high. And that is the implication of this is that the push you have here is going to be small compared to what you are going to have here. Because you are getting, even though you are getting a lower high, it's giving you a premium price on the indicator to achieve a better push to the downside. It's as simple as that, guys. So this is the appropriate way to make use of your tool in order to read the market the right way. Is that okay now? So for the guys who want to trade Bitcoin, watch Bitcoin at exactly 22,000. All right, watch what Bitcoins will do at 22,000. And from 22,000, you may have it drop below. And then in dropping below, expect it to come hit this level. All right, expect it to come hit about 19,500 before any other thing. All right, so that is it on BTCs, guys. So somebody says, please still speak on what happens after an impulse and crawl. It's simple, guys. We have spent a lot of time, and I believe this is going to be the last question I'm going to answer. Okay. Now, if you see an impulse, here, you see the last move here, and you are now seeing a crawl. It's a crawl. Can you see? This crawl is what I would call an ending structure. Okay. an ending structure. This ending structure, if you go back to your indicator, your RSI, you're going to see something that look like this. You're going to see something that look like this. It then means that on the crawl, even though you are having a higher high on the crawl, the indicator is giving you a lower high. And this lower high is telling you that momentum to the upside is no longer there. It is the momentum to the downside that you need. So, and in that case, every last high is a potential sell. Every last high is a potential sell. Every last high is a potential sell opportunity. But for people who are very conservative in their choice of entry, what they do is they allow the first breakdown to the downside, find the corrective structure to 50 to 61.8 or 78% retracement as the case may be, and then they find sell opportunity to the downside. Is that okay now? The same thing is also applicable to the same thing is also applicable to a sell. Okay, when you're having an impulse and you're having a crawl like this as end of structure, you must see a divergence where here you begin to see a higher low. Okay, a higher low here on the indicator. You are seeing a higher low on the indicator, and right here you are seeing a lower low. So at a point you are going to see a move, a flash move to the upside. Just look at look for the corrective structure and take a buy opportunity to the downside, to the upside. Is that okay? So that is how to look at the impulse and crawl scenario in your chart. Impulse and crawl scenario in your chart. Is that okay now? So I believe there is no further question. No further question. Can you please look at XRP USD and zoom weekly to daily time frame? I'm looking to buy this market long term. Thank you. XRP. I don't trade it, but I'll check it for you. XRP USD. XRP USD. You are looking to buy it long term. Okay. You have to hold your long time agenda for now. You need to hold it. All right. Because with what I'm seeing right here, I don't think the buy is ready. Guys, you have to be patient because look at this wave to the upside. Where do you think you have demand area, guys? This bullish move here is a fake out. It's a fake out. They fake out all the people, greedy people that were buying here because they saw this. Because they saw this move. Okay. After that, what happened? Market came down. They have lost all their money to liquidity. Okay. So now any area between here, any zone between this level and this level is what is called fair value. Fair value zone, guys. There is no opportunity between this level, guys. There is no opportunity in between that level. This is a retail trader space. Okay? This is a retail trader space. And no opportunity is found in retail trader space. Okay? So what you have to do is you need to wait for two scenarios to play out. All right? And what is the scenario? This is your buy zone. This is your buy zone. Can you see? And if you take a fib of this move to the upside, if you take a fib of this move to the upside, why is my fib behaving like this? Hold on, guys. What's going on? Just hold on, guys. Okay, I'll see to it later. Just take a fib. Guys, I believe you can see what I'm saying. Who is saying it? my fib is not doing the right thing. 50 to 61.8 is supposed to come to this level, guys.
I think it's network.
You said what?
I think it's your network.
Ah, does it normally behave like that?
Yes,
No,
my network is good.
Eh.
Mr.
Oh my God.
Can you please look at XRP, but the feed should be from Coinbase, not from B.
Somebody is talking, I cannot hear you.
Oh, can you hear me now? Hello?
You have to raise your volume, please.
Okay, I don't have my earphones with me, but then I'll try. You let me know. So I'm saying that the XRP chart you are currently looking at,
Yes.
the feed from that broker is actually poor. If you can look at the feed from Coinbase or
okay. Oh, I can understand you now. All right, thank you. Let's look at Coinbase.
Yes. Or Binance rather. Binance.
Okay, Binance.
Binance or Coinbase. Both.
Okay.
Both have. Yes.
Okay. Oh. We're having even a different stuff entirely. All right, so let's take a fib. It's the same thing, guys. It's the same thing, guys. So let's just leave it for now. But what I'm telling you, in essence, is that this pair need to come to this level. If it doesn't come to this level, guys, don't contemplate to buy for long term. Don't even try it, because this pair can make a move here and come down. We need to see this proper corrective structure, guys. We want to see this proper corrective structure. We want to see it proper here. This is the demand level for a move to the upside. This is a cleaner corrective structure. At this level now, if you don't want to sell, leave it. But for me, I'd rather have a sell opportunity right now than a buy opportunity. There's no buy opportunity. This market will have to gravitate towards the appropriate structural level at demand here. Okay, and even if this market, go and write it down, even if this market should make a move to the upside, it's coming down. It's going to have to come down to this level. If it doesn't come down to this level, it's not going to be comfortable for a long-term buy. The same way I told you, specifically on the 12th of July, 2021, that BTC, when it was at 68,000, I said BTC is going to come to as low as 20,000. It was at this level. We only had this structure formed that time at 68,000 here, right here. I said, stop buying BTC because BTC is going to come to at around 20,000. Look at it. 1 year later, it has come to 20,000. That is analysis. And don't be surprised, it's not done. It's not done. Still going to make corrective structure, one more push down. Probably at this level, around 10,000 or 11,000, it will make a move to the upside. Because if we are having a bigger push here, people will think that Bitcoin has taken a move, whereas this is only forming a WXY structure, a WXY, W, X, and Y push down before we have this move to the upside. So please, if you want to buy Bitcoin for a long term, be careful for now. It's not ready. And XRP, let's check your XRP USD. You see that in this XRP USD, what I will be looking at if I were the one that want to trade it, what I'll be looking at right now is to look at a structure that is happening here. Whether we like it or not, this structure, you see this one, it doesn't take this area. It had a pullback and it had a move down. So what I do, as I informed you before, is that this three-wave structure to the downside, I normally take it as one wave and one wave, as one wave. Okay? And if I take it as one wave, it then means that if I want to take a fib, I will start from here and here. Okay? And then I'm going to target 50 to 61.8. It's going to be around this level. Forget what this fib is doing. It's not correct. It's not correct. I think it's doing the reverse. Okay? So I want to look at the corrective structure that come here. If it's a corrective structure that I can define, that I understand very well, then you are going to have a push down. So at 0.800 or 0.8 8.4 or 8.5, expect a push down to the downside. Okay, and again, if you want to confirm this push down, you look at this tip here, look at it here, and then as we do it, you bring out your indicator, If at this high corresponding to this level, then if you have this lower high and it's corresponding to higher low, look at it. That is a bearish hidden divergence, and that's appropriate level to take it to the downside. All you need to look at is, do you have a bearish engulfing here and all those things. Once you have all those things, you are good for the downside. But right now, guys, this is weekly. Let's see 4 hours. If we had a buy setup on 4 hours time frame, because of course in a larger time frame, we are looking for correction to the upside. Is that not? We are looking at corrective structure to the upside. Okay, and I think I can see what this guy is saying. Now remember that this buy you are buying to the upside is a corrective structure. I hope you know that, because on a weekly time frame, we are saying that we need to have a little correction to the upside and push down. So you are buying a pullback on a weekly time frame, but we need to see development of trend on lower time frame. How do we look for development of trend? I look at something like this. At this current level, just hold on, there's a check we can carry out to know whether we will have a move to the upside from there. Yes, that is confirmed. You see this level, you see an impulse. At this level, you see an impulse, you see a correction. You see a push up, you see a correction. We're expecting a push up. But before you expect a push up, okay, there are things you need to do. Where are the two push to the upside? Look at it here. Look at it. I'm tactically teaching you guys how to use divergence the proper way. Look at the first push. Look at the second push. Okay. Then look at the indicator. You can see that it made a slight higher high. Okay. Look at the indicator. Does it make a higher high? Yes. It made a higher high. Except on the RS side. But in determining this, I love to use my stochastic. It made a higher high, and that means that there's going to be a trend continuation to the upside. Then on the low, it hit the trend line here, it hit it here, it hit it here. Okay, then this last move here, you take a fib. Is it at 50 to 70, 61.8? Yes. You now look at it. Does this level here that is making a higher low, does it make a lower low on the stochastic? Yes. This level, look at it here. Can you see? Simple. Because it made a lower low on the stochastic and it made a higher low on the price. This is bullish hidden divergence. And that is the beginning of another move to the upside. Can you see it now? So right now on this particular pair, what I would advise you do is simple. If you are the type that know how to risk, that know how to take risk, okay, you can put your stop loss here and buy. But if it were to be me, what I'm going to do is simple. I want to gauge what is called an originating impulse. Okay, I want to see more push here and see correction to confirm this move to the upside. I want to confirm that move to the upside, because of course you see that you have a contracting flat here, you have a push down, and you have a push down, and this low, this wave here is already equal to this wave. So what are we looking for? Look for a final impulse to the upside. Look for corrective structure to 50 to 61.8 and buy to the upside. But remember, as you are buying a trend in the lower time frame, you are buying a correction in the higher time frame. And then when you get to that level, I told you 0.84 on a daily, be careful of what happened at this level. Anything this level, be mindful of what happened. Okay, because you can have another push to the downside. Are you satisfied with the analysis? Are you satisfied?
Thank you. To the point.
You said what?
Very satisfied, Mr. Ness.
Okay, that's very good.
I'm said to the point. Thank you. Thank you.
Okay, thank you. We're having some new people in our tradition.
So
In a Wednesday live session, we normally say hi to them. I'm seeing Becky. Becky, you are welcome to Wednesday live session. How are you today?
I'm fine. Thank you, sir.
We are seeing you for the first time. How are you? You are good?
Yes, sir. No,
Okay.
this is my second or third time. I've been attending the last session, sir.
In attending Wednesday live session?
Yes.
Oh my
But
goodness.
I didn't attend the last.
Okay, that's good. I'm seeing you for the first time. I hope you enjoy our analysis.
Yes, sir.
All right. Thank you very much. Who again are we seeing for the first time? Kenny. Kenny, we are seeing you for the first time. How are you today? Kenny, can you talk to us? Okay, Kenny is busy. All right, so I think all other people.
Thank you for having me, sir.
You said what?
Thank you for having me.
Oh, Kenny, how are you?
Very well, thank you, sir.
We are seeing you for the first time today.
Yes, sir.
Oh, that's very good. We love to see you the more. I hope you enjoy our analysis.
Yes.
All right. Okay,
Yes,
Obi.
I do.
All right, thank you. Obi, we are seeing Obi for the first time.
Oh, thank you, sir.
We are seeing you for the first time.
No, I've been here before.
Okay.
I'm a regular.
Okay. All other people, they are landlord and landlady already. Okay, so thank you for coming. I'm going to upload the video on YouTube. You can go there and enjoy it the more. And if you are here, you have not subscribed to our YouTube channel, please consider to do so. And don't just subscribe, pass your comments. Where you don't understand, let us know on the comment section, all right? And also like whatever we do, share it so that YouTube can show it to as many that require such. Okay, so thank you for coming. Have a nice day, everybody.
Are you too, sir?
Yeah.